More Than Numbers podcast.
Hello and welcome to More Than Numbers, and today we are in conversation with Millie Thompson, a software expert, and we're going to be talking all things making tax digital. It's literally just around the corner, so it's a really good opportunity to hear from the experts how we can best help you and equally how you can get the most out of making tax digital. So thanks ever so much for joining me today, Millie.
No, thanks for having me.
So I think it'll be useful just to outline what the requirements are for making tax digital. I know we've spoken about this a lot in the past with clients, but just to give that overview of what are the requirements for making tax digital for income tax.
Yeah, so in April 26, we have the 50,000 turnover clients coming on board into MTD. So that means if you have a combined turnover, so your sales rather than your profit, that means you are mandated into MTD for 3 years. As of 27-28, so April 27, we have the 30,000 turnover coming in, and then the year after, 28-29, we have the 20,000 coming in.
So I think there's some really interesting points just to pick up there, and one of them is that it's not based on profit. When you talk about that, sometimes people think it's profit. It's actually turnover.
Exactly.
So you have to consider that. And it is for sole trades and rental properties.
Absolutely, yeah.
So one of the questions that we've been asked quite a bit is, what about if only my rental property is over 50,000 or only my sole trade is? Do I have to do making tax digital submissions for both?
Exactly, yes. So any income stream you have, whether that, say you've got 50,000 turnover in your rental properties, but you have 10,000 for your sole trade income, they both are required to go in. So as a sole trader, if any income from any source is over 50,000, it means all of your trade income is required to be mandated. So a submission for each, yeah.
And I think that's it. So the submissions will be quarterly, which is quite a big change for a lot of people that are not used to doing quarterly submissions. If you're used to making tax digital for VAT, you will have been doing quarterly submissions for that. But it's slightly different because that threshold is lower. So we'll be bringing in a lot of people that haven't ever done quarterly submissions, and they have to be digital. There has to be a digital record there and digital links. So this is where software really comes into its own. In terms of those deadlines for the submissions, do you want to just run through what those are for people and how that'll work?
The first deadline is the 7th of August. So essentially you've got a month and a week after the end of the quarter to be able to submit.
Yeah. So
that carries on for the following 3 quarters. And then again, the final tax return deadline submission is the 31st of January the following year. Now that is a very, very latest submission date. So obviously you can submit any time from the 6th of April the following year. So as soon as the tax year is finished, as usual, submissions obviously encouraged as soon after that. Yeah.
And in terms of those submissions, we mentioned about having rental property and sole trade, but equally if you've got multiple sole trades, those quarterly submissions, it is a submission per trade, isn't it?
Exactly.
So it's not just one submission per individual, it's a submission per trade. So that could add up to quite a few submissions.
Absolutely. Yeah, as I say, if you've got, you've got rental income, you've also got you're a plumber, but you also do, something on the side. Those 3 submissions would be required if any of those or the combination of those equal to 50,000 and over.
Yeah. And then in terms of payment though, and I think this is important for people to understand, this is not changing when people pay their tax.
No.
The usual payment dates of the 31st of January and then a payment on account 31st of July have stayed exactly the same.
Exactly, yeah. So all we're doing is having a little bit of a closer insight into your earnings throughout the year. So, quarterly you are going to be submitting your income and expenditure. That just gives you a bit of a real-time insight into what tax may be due at the end of the year. So it's not an opportunity for you to pay on account, or it's not asking you to pay quarterly. It's just giving you a closer insight into what we expect or what HMRC expect.
And I think that's a really useful starting point of what are the benefits of MTD, because you can often think, gosh, it's a lot more extra work, it's a lot more things that we need to think about, and it is, and we'll talk about how software can help people in a moment, but that first point of call is actually you're going to have a rough idea. It's not going to be perfect by any stretch of the imagination, because there are other things that may come into it, dividends, etc., that aren't in these quarterly submissions. But just to give you a bit of an idea of roughly what your tax will be based on the information that you submit. And it is a cumulative submission, isn't it? So by that, what we're talking about here is that you do your first 3 months, the second quarter does the 6 months, and so on and so forth. So it is that cumulative submission. But let's move on to the software, if that's okay. And there's so many different types of software out there. It can be a bit of a minefield. And what is actually required. So I think in terms of software, what would be your advice to people in terms of how do they approach looking at what they need?
Yeah, absolutely. So the requirement, given by HMRC is that you must keep digital records. So by that, if you have a business bank account and you're able to determine what's an expense and what's income, and what that income is for, what that expense is for, that is predominantly all you need to do. My starting point for any client would be to really trust the accountant you're with. Obviously, they have been gearing up for this for years. They've done their
research. Delayed, but we're here now.
Absolutely. As I say, the relationship with your accountant, it really needs to be as strong now as it ever has been. They know exactly what's coming in, they know exactly what's required of you. The way you work with an accountant is, as I say, fundamentally more important now than ever. Whether you want to be involved in your financials, whether you want to hand everything off and let them take care of it, they have all the tools available to actually support with that. And alongside that, they are there to make sure everything's done and on time and with accuracy. But the consultation and those real-time insights of speaking to your advisor who's got a really good idea of what's going on in your business 4 times a year rather than once is really, really helpful.
And often once, but past the year end, and then we're too late. We're looking at historic data then. So,
absolutely. As I say, if you have that opportunity to, see that overheads are slightly high and you might need to increase your prices, or supplies, prices have increased, and you have that ability throughout the year to make changes. But also tax planning, if you can identify a little bit of an issue throughout the year, accountants are the best people to be able to actually advise on it and, give you a little bit of a hint to go, right, if we change this slightly in the business, or we increase your prices or try and find a different supplier, those kind of insights throughout the year can save you a hell of a lot in tax.
I think one of the things that my big message to people is don't look at it as a burden. Let's see the opportunities with it. And I think software, as we said, there's lots out there, but they all do a similar sort of thing in slightly different ways. But one of the key things that I think is direct bank feeds. One of the most useful things that somebody can have with software, which is where the bank directly links in. Often you can set up rules, which means that it can be automatically posted. So it's not that heavy administrative burden that it necessarily needs to be.
Absolutely, yeah. As I say, we have a lot of, and I've seen a lot of businesses working out of their personal bank account. That money that comes into your personal bank account isn't yours, essentially. It's owned by the business, and the business has debts and so on and so forth. So really separating that income out from a personal bank account into a business, exactly what's going in there, exactly what you're paying yourself, so you can, make sure that that's all covered as well. But it makes it really clear from a reporting point of view that, this is what the business has earned, this is what the business owes, and for OTD, that's the first step I'd take if you haven't already. Yeah.
And then one of the other things is making sure that they're receiving their cash as quickly as possible from customers, which is something that, if you're invoicing through software, it automatically gets sent to them. Often there's automatic reminders to customers. So that cash flow can be really aided if the software is used properly.
Absolutely, yeah. As I say, the times where we were raising sales invoices on paper and pen or on Excel and sending it out after the fact, that time has passed. We've got the ability with software to be able to raise the invoice there and then, or, pre the job. There's even ability on a lot of softwares where you can use your phone as a point of sale.
Yeah.
Pop in your phone to be able to receive payment there and then if you're a hairdresser, you're a barber, and they're able to make payment there and then, and that invoice paid. There's no waiting for payments afterwards. So it is a really helpful tool in terms of being able to do everything as you go.
Yeah.
And that's the idea of MTD. It is to be able to be as close to the facts and as close to real time that your business financials are as accurate as it can be.
Yeah. And then the other thing that we've often seen over years gone by is that bag of receipts coming in. And whilst that had its place, there's more efficient ways of doing that now. So again, we've all got a phone in our pocket or in our handbag, that getting out, taking a photo of that receipt and it automatically going into the software. It's not a magic wand software, but I think there are lots of things that can be done and utilised to make it as efficient as possible.
Absolutely. As I say, it is that easy that, if you've got your phone in your pocket, you're raising the invoice, you're out at the shop or you've paid for fuel, whatever it is, as soon as you've got that receipt, snap a photo, upload it into the app, and that's it. It's all ready. So there isn't that kind of, month end or quarter end or year end even rush of, okay, I need to find my receipts from this date back in January a year ago. You've got that ability there to just, make sure everything's in order. Get rid of that receipt and it's all done for you.
And I think that's the thing with Making Tax Digital. Obviously, we've now got these quarterly submissions. It's about making our clients' life as easy as possible. And I think this is where, if they pick the right software, obviously talking to us or their own accountants, picking the right software, utilising it in the right way, we can really make that quite a smooth process, or as smooth as it can be, considering we're going from doing something once a year to 4 times a year, but making that process as smooth as it can be.
Absolutely. As I say, it is very much the way you work with, the way that a sole trader will work with their accountant and with the software. It can be really pivotal for some businesses. If you have that added insight from the software as you go along, you've got that added insight in consultation with your accountant, you're able to identify earlier. But also it saves you a lot of time. You don't have to sit there in an evening or a weekend going through your receipts or raising sales invoices anymore. I know a lot of people who do that. Do it as you go along, and it a lot more accurate.
So based on your experience, what are the key tips you would give people to starting out on this MTD journey? You mentioned talking to your accountant, but actually utilising software as well. Those key things, if they could do the top 3, what would it be?
Yeah, so I think the first thing would be, if you are working out of a personal bank account, definitely start separating that out. Whether you've got 2 income streams or you've just got the one, but you're having it go into your personal bank, just separate it out. It's really, really easy to get a business bank account these days. You've got Monzo, we've got all the ones online who are quite easily, just fill out a few questions and you get your business bank account. That would be my first advice. And then with that, it would be, speak to your accountant, do your research on the type of software that you want to do, but also, be familiar with how you want to work. If you want to have a real involvement in your financials and you want to have a bit of training on software, reach out to either the software provider or to your accountant. They're very clued up on majority of softwares. But I think, being comfortable, if you're happy to raise sales invoices or you want to just put your receipts on, that's okay. You just need to obviously communicate that to the accountant. And I think the third one would be just be really comfortable in that it's not as daunting as it seems. It really isn't. If you have a really solid bank statement with income and expenses on it, that's all you need. And just using that information to your advantage more than seeing it as a bit of a burden.
I think the other thing to add to that is, it's not, if one submission isn't right, you can just correct it on the next one. So because it's that cumulative submissions. And I think, don't be so afraid that the revenue are going to be, looking at it. This is a learning curve for a lot of people. But, it doesn't have to be absolutely 100%.
It doesn't. As I say, you still have that opportunity at year end to be making those adjustments. If you've missed something out, or there's been a big bill that hasn't been paid or anything like that, you can make those adjustments at the end of the year. Or say you've bought a van and you paid cash for it, forgot to tell your accountant, didn't declare it quarterly, you still have that opportunity to be able to declare. So yeah, as close to accurate quarterly is ideal.
Yeah.
But if it's not, that's okay. It's not the be all and end all, and it's not the final submission.
Yeah. Well, that's been really useful. Thank you so much, Millie, for guiding us through that. Lots of things to take away from that, but I think the key being it is an opportunity. We've been having lots of conversations with clients about what's the right software for them, how involved do they want to be, often dictates what sort of software they need, what level of software that they need. So please reach out to us, to your existing accountants, because this deadline is coming. And in an ideal world, even if you're not at that 50,000, we want to be thinking if you're above the 30,000, which is next year, getting you as prepared as possible. So a real opportunity to make sure we're utilising software to be as efficient as possible, save time and save costs as well. So really grateful for you being here today, Millie. Thank you so much. But yeah, lots of things to think about and lots of takeaways. Thanks ever so much.
The More Than Numbers podcast.